Welcome to ZICA Academy tutorial on stocks valuation using LIFO method. This is my second video on the topic. In the first video, I've examined FIFO, first in, first out method. In this second method, I want to examine LIFO, last in, first out method. If you are coming across my lecture for the first time, please like the video, also share it with others. If you are a returning subscriber, thank you for being part of this channel. What is LIFO? LIFO is an acronym for last in, first out. Last in, first out. Under this method, the most recent materials received or the most recent material purchased are issued out first, with the price of the most recent purchase in the store. The most recent materials received are issued out first, with the most recent purchase price of the item in the store. So, take note of this. Under LIFO method, I said recent material purchased are issued out first. The most recent purchased are issued out first. And at what price? At the price of the recent purchase in the store. At the price of the recent purchase in the store. Please bear this in mind. The most recent material purchase are issued out first at the price of the recent purchased in the store. So it means the last that came in, that is why we have last in, will be the one that will be issued out first. That is why we say first out. The one that came in last will be the one that will go out first. Last in, first out. What are the advantages of this method? Advantages of LIFO method. Advantages of last in, first out method. Number one, it is simple to operate, just like the first in, first out method. LIFO is equally very easy and easy to operate. Two, it is an actual cost system. LIFO is an actual cost system. Number three, the cost charged to production is closely related to current price level. The cost charged to production is closely related to current price level. These are some of the advantages of this method. Then what are the disadvantages? Disadvantages of LIFO method. Disadvantages of last in, first out method. Number one, it involves considerable clerical work. It involves considerable clerical work. Number two, the value of closing inventory may not be acceptable for income tax purposes. The value of the closing inventory, the tax authority may not accept it. It may not be acceptable for income tax purposes. Number three, during inflation, LIFO understates profit. Most exam questions involving the use of LIFO will ask you to calculate the value of closing inventory. So to do that, you will need the store ledger account. Store ledger account. So in your store ledger account, you will have a column for date, then particulars or details. After this, You have a column for receipts, another column for issues, and another column for balance. Under the receipts, you divide it into three: the quantity, the price, and the amount or value, or you may put total. So if the price is in US dollar, the quantity may be in kg or in units, so depending on the question. So if it is in kg, you put kg. So you have quantity, price, total. Quantity in units, price in dollar, and total in dollar. Then quantity, price, total. The quantity in units, price in dollar, and total in dollar. I haven't given you the format for store ledger accounts. So now we want to take a question as work example. Keep watching. ATS 3, March 2025, cost accounting question 2. At the beginning of March 2023, Yalaje Company had in store inventory of 800 units, valued at 200 naira per unit. The following represents further receipts and issues for the month of March 2023. We have receipts. March 8, 700 units at 180 naira per unit. March 17, 800 units at 200 naira per unit. March 25, 500 units at 250 naira per unit. Issues. March 9, 600 units at 250 naira per unit. March 11, 800 units at 250 naira per unit. March 31st, 1000 units at 180 naira per unit. You are required to complete the inventory account showing the balance at March 31st, 2023 using the following valuation methods. 1. First in, first out method. 2. Last in, first out method. Now, let's have the solution to the question. In the first part, you are to use the first in, first out method. The name of the entity is Iyalaje. Iyalaje Company. In the first requirement, you are required to complete the inventory account. So we want to have inventory account using first in, first out method. Using the FIFO method. The second method requires you to use LIFO method. I've told you you will need to have a column for date, particulars or details. Then a column for receipts. A column for issues. And the third column for balance. Then under the receipt, you have a column for quantity, price, and amount or value. Or you may put total. Quantity, price, total. Quantity, price, total. Let me maintain total all through. Amount is in naira. The quantity is in units. 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 Now, you were told at the beginning of March 2023, Yalaje company had in store inventory of 800 units valued at 200 naira per unit. So that means as at the beginning of March, these transactions occurred in the month of March. Let me say March 1, opening inventory. Opening inventory is 800 units at the price of 200 naira per unit. If you like, you may include the opening inventory in the receipt column, but better still, so you can just have it in the balance column since it will have been recorded in the previous period. 800 units at 200, and the value is 800 times 200. That gives us 160,000. 160,000. On the 8th of March, we have a receipt of 700 units at 180 naira per unit. March 8, receipts. So you record that under receipts. 700 units at 180 naira per unit. So 700 times 180, that gives us 126,000. 126,000. Then under the balance column, you had 800 before at 200, and that gave us 160,000. Then you receive additional 700 at 180 naira per unit, and that gives us 126,000. Then, before March 17, this transaction will have happened. We have issues on the 9th of March. So, March 9, you issue 600 units. I've told you this price of issue is not the price at which issue will be made. This issue price is the selling price. If you want to calculate the value of sales, that is when you will need this price. So it is the price of receipt that will be used, price of purchase that will be used. 600 units were to be issued. Remember, you are using FIFO method, first in, first out. So the one that comes in, the oldest one in the batch is 800 units. That means the 600 units will be issued from these 800 units. So you have issuing of 600 at the oldest, we are making the issue from the oldest batch, and the price of that oldest batch is 200. So we have times 200. 600 times 200, that gives us 120,000. Then, from this 800, remember you have issued 200. You'll be left with balance of 200. At the price of 200, 200 times 200, that gives us 40,000. Then this 700 is still intact. You have not issued anything from it. 700 at 180, and that amounted to 126,000. Then after March 9, so the next, this is 17. This March 11 will have equally happened. You want to issue 800. March 11, issuing of 800 units. But the oldest batch in store is not up to 800. You have 200 in the oldest batch. So you first of all issue the 200 units at the price of 200, the price of the oldest batch. That gives us 40,000. Remember, what you want to issue on the 11th of March is 800 units. And you have issued 200 from the oldest. Then you are left with 600. You cannot issue that 600 from this 700. So if you issue 600, in order to make it 800, and the oldest batch now is 180, is 700 at the price of 180, since you have exhausted this. So that means the issue of 600 will be made from 700 at the price of 180. So times 180. So 180 times 600, that gives us 108,000. 108,000. No, this is together. So 200 plus 600 making 800. So you've done with March 11. Then the balance here will be, you have issues 600 from this 700. Then you are left with 100 there. 100 at the price of 180. That gives us 18,000. So you are left with 18,000 in inventory. After March 11, the next transaction happens on the 17th of March before you get to 31st of March. On the 17th of March, you receive additional 800. On the 17th of March, you receive 800. So that will be 800 on the 17th of March, receipts. Notice on the March of 9th of March, you have issues. And on the 11th, you have issues. So on the 17th, you have receipt. Receipt of 800 units at the price of 200. 800, you record that under receipt at the price of 200. 800 times 200, that gives us 16,000. 160,000. So we have 160,000. Under the balance, you had 100 in store before. You receive additional 800 at the price of 200. That gives us 160,000. So what you have in store now is 900. 100 plus 800. Remember, you are using first in, first out method. After 17th of March, the next date is 25th of March. On the 25th of March, you receive additional 500 units at the price of 250. 500 units at the price of 250. On the 25th, you have receipts. 500 units at the price of 250. So that will be 500 times 250. That gives us 125,000. 125,000. Now, the balance column, you had 100 before at the price of 180. That gives us 18,000. Then you receive additional 800 at the price of 200. That gives us 160,000. You now receive 500 at the price of 250. 500 at the price of 250, and that amounted to 125,000. 125,000. After the 25th of March, the next date. So, and that 25th of March is the last date of the receipt. The next item you have is issue, which was made on the 31st of March, 1,000 units. I've told you this price are not to be used. You only need them if you want to calculate the value of sales. If you want to know the relevancy, because this question does not require the application of these prices. So if you go back to the first video, you will see where the selling price were used in the calculation of sales revenue, because that question requires us to calculate gross profit. But this one doesn't require that. So go back to the first video for better understanding. So now you want to issue 1,000 units. You want to issue 1,000 units? 1,000 units. That is on the 31st of March. 31st of March. You have issue. You want to issue 1,000. But what you had before, the oldest one in the batch, in the store is 100. That means you have, first of all, have to issue the 100. 100 at the price of 180. That gives us 18,000. Then you've done with this, you have exhausted this. Remember, you want to issue 1,000. You are left with 900. The next one is 800. That means you cannot issue the 800 again at the price of 200. That gives us 160,000. After this also, remember 100 plus 800, that is totaled 900. You have issued 900 altogether. But what you want to issue on the 31st of March is 1,000. Then you are left with additional 100. Then that 100 cannot be issued. Since you have exhausted this, then you can issue the remaining 100 from 500. You have 100 from at the price of 250. 250. That amounted to 25,000. So this is the issuing of 1,000. If you have 100 plus 800, that is 900. Plus 100, that is 1,000. Here, you have issued 100 from this 500. You are left with 400 at the price of 250. So that gives us 400 times 250. That gives us 100,000. 100,000. This 100,000 is the closing inventory. That means our closing inventory using FIFO method is 400 units. 400 units at 250 naira per unit, giving us 100,000 naira. That is the value of the closing inventory required on the basis of first in, first out method. Then the requirement B asks us to make use of last in, first out method. From the B part of the question, so you are required to complete the inventory account showing the balance at March 31st, 2023 using the last in, first out method. So inventory account, using the last in, first out method. We have a column for date, another column for details or particular. Then we have receipts, issues, and balance. So under each column, you have quantity, price, and total. The quantity is in unit, price is in naira, and total in naira. Under issues, you have quantity, price, and total. Quantity is in unit, price is in naira, and total in naira. In the balance column, you have quantity, you have price, you have total. Quantity is in units, price is in naira, total in naira. Now, you have, at the beginning of March 2023, Yalaje company had in store inventory of 800 units valued at 200 naira per unit. So, at the beginning of March, let's have that as March 1st, opening inventory. Opening inventory. You may not record that under the receipt column. The opening inventory is 800 units at the price of 200 naira per unit, and that amounted to 160,000. That is the opening inventory. On the 8th of March, 700 units were received at the price of 180 naira per unit. That is March 8th. Receipts of 700 units at the price of 180 naira per unit, and that amounted to 700 times 180. That gives us 126,000. Then in the balance column, you have 800 units at 200, 160,000. Then that is the opening inventory. Then additional 700 at 180, 700, 180. That gives us 126,000. That is in the month of, on the 8th of March. After the 8th of March, the next transaction happens on the 9th of March, in which 600 units were received. 600 units at the price of 215 per unit. I've told you this issue price, the selling price, this price at which attached to the issue is the selling price. And that is not the price at which issue should be made. So now on the 9th of March, you have issues. Issues should be recorded under the issue column. You want to issue 600. Remember, you are using last in, the one that comes in last. You know, this is first in, but this is the last in. The one that came in last, the one you received last, is 700 units. It is from these 700 units that your issue should be made under the last in, first out method. Last in, first out. The one that came in last will first of all go out. That is why you have it. Last in, first out. So you want to issue from this 700 now. We have issue. You want to issue 600 on the 9th of March. So that means the 600 will be issued from the 700. So that means you have 600 from this 700 at the price of 180. 600 times 180. That gives us 108,000. 108,000. Then the balance column, 800 is still intact. You've not issued anything from 800 at the price of 200, and that is 160,000. But from this 700, 600 has been issued. You are left with the balance of 100 at the price of 180. That gives us 18,000. That is what you have left in inventory on the 9th, after the transaction that took place on the 9th of March. After the 9th of March, you have March 11. Another issue were made on the 11th of March, and that is issue of 800 units. On the 11th of March, you have issues. You want to issue 800 units. Remember, you are using last in, first out. This is the last in. So the last in, the one that came in last, is left with 100. So you issue the 100 first at the price of 180, and that gives us 18,000. After this 100, remember on the 11th of March, you want to issue 800 units. You are left with additional 700 to be issued. That means the 700 cannot be issued from these 800 units. The last in first. The last in first out. So 700 at the price of 200. That gives us 140,000. So, this together now, 100 and 700 making 800. So, remember, from this 800, you have issued 700 from it. You are left with 100 units. 100 at the price of 200 is still in inventory. That gives us 20,000. Now, after the 11th of March, then you have 17th of March. On the 17th of March, you receive additional 800 units at the price of 200. So 800 at the price of 200 were received on the 17th of March. So March 17, you have receipts. So you receive 800 at the price of 200. 800 times 200, that gives us 160,000. Then the balance column. Remember, you had 100 units in the inventory before. Then at price of 200, that amounted to 20,000. Then you receive additional 800 units at the price of 200. That amounted to 160,000. After the 17th of March, the next period that follows is 25th of March. On the 25th of March, you receive additional 500 units at the price of 250. So that is 25th of March. That is equally a receipt. March 25, receipts. You receive 500 units at the price of 250. 500 times 250. That gives us 125,000. Then the balance column, you had 100 units before at the price of 200. That is valued 20,000. Additional 800 at the price of 200, and that is valued 160,000. Then you now receive 500 units at price of 250. 500 units at the price of 250, and that is valued 125,000. That is after March 25th. Then the next transaction after the 25th of March is the transaction that took place on the 31st of March, and you issued 1,000 units. I've told you this price is not relevant. We only need it if you want to calculate the sales revenue. You want to issue 1,000 units. Remember, you are using last in, first out. That is 31st of March. You have issue. You want to issue 1,000. The last in will go out first. That is why we say last in, first out. Last in, first out. The one that came in last is this 500. So it will go out first. Last in, which is 500, at the price of 250, and that is valued 125,000. Now, remember on the 31st of March, the quantity yield is 1,000. But this 500 have been issued, you have exhausted this. Then the next last in is this 800. You will now issue 500 from this 800. So you have 500 at the price of 200. 500 times 200. That gives us 100,000. So 500 plus 500 making 1,000. Then the closing inventory, now you are left with 100 units at the price of 200. That amounted to 20,000. Then from this 800, you have issued 500. You are left with 300 units at the price of 200. That is valued 300 times 200, that is 60,000. So the sum of this is 400. The closing inventory is 400 units, and the value is 80,000. Therefore, the closing inventory is 400 units. Closing inventory 400 units at 200 naira per unit, since the price attached to each of them is 200. So giving us 80,000. So that means if you say 400 times 200, it will equally give you 80,000. So that is the end of the solution to the question. In my next video, I will examine weighted average price method. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.